Hey guys, welcome to DevTech Finance. In this video, we would be learning about the term called sector fund. So let's start. Sector funds invest in companies that belong to a particular sector, such as technology or banking or automobiles, any of the sector. So, sector funds are usually mutual fund schemes, and the speciality about which it has got its name is that this fund is objected towards any particular sector. So that sector could be banking, hospitality, technology, power, any of the sector, and the portfolio in this particular scheme which would be built would be including all those companies only that belong to this particular sector which would be objected for that particular scheme. So all those companies that are involved in that particular sector, only they could be added in the portfolio which would be investing in sector funds. Now, the risk is higher because of lesser diversification since such funds are concentrated in a particular sector. Investments in sector funds have to be timed well. Obviously, the risk would be at higher side because there is lesser diversification. So, we are diversifying across the companies only in a particular sector. So, we are not diversifying across various sectors. So the risk is higher. If that particular sector is performing well, our scheme will be giving good returns. But if that particular sector is not performing well, our scheme will be providing losses and negative returns. So this also happens, and thus the risk is on higher side. Now, sector performances tend to be cyclical, and return from investing in a sector is never the same across time. How we can say that? So, for example, auto sector does well when the economy is doing well and more cars, trucks, and bikes are bought. It does not do well when demand goes down. So, for example, these sector performances are also cyclical. So, if the economy is doing well, the demand for these vehicles and all would rise, and thus the sector would be performing good. But if the economy is not doing well, the demand for the auto sector would be the most impacted, and it would go into losses. So that would be affecting the sector fund returns as well. And you can take, for example, some of the funds which are provided in India are like that Aditya Birla Sun Life Banking and Financial Services Fund. So, as we can observe from the name, this fund provides this fund is a sector fund which is focused on only banking and financial services. So, all the companies would be included which belong to banking sector and financial services sector. So, also, for example, there is a fund like New Energy Fund, which is focused on energy companies only, and then there could be funds like Nippon India Power and Infra Fund. So if this is Infra Fund, it would be investing only in the companies which are involved in infrastructure business. If it is a power fund, it would be investing only across the companies which are carrying its business and power generation and all. And thus, the sector fund are very specific and investing in only a particular sector, and also a little riskier. So, thank you for watching. Do like and share my videos. Subscribe to my channel, DevTech Finance. Thank you all.